Hi, my name's Scott Dahl. I want to thank you for tuning in to another one of my podcasts. I wanted to put one up today because something very, very important to this structural bull market that I believe we're in happened this week, and I want to show you in detail. Before I do that, for those of you who are not my clients or who have just started tuning into my podcast, I want to tell you about my experience. So I'm a chartered market technician. It's the highest accreditation you can get in the field of technical analysis. I was the 291st person to earn this designation in 2001. There's probably about 5,000 people globally now that have this certification in technical analysis, reading charts. I've had my own registered investment advisory, Dahl Capital Advisors Incorporated, since 1996. I've been in the investment industry for 41 years. I started right out of college. I started reading charts back in 1976 when I was a teenager. And at the time, I would draw charts. I would get a flat paper and I would have to actually draw the physical chart myself. Then eventually in the early 80s, we started getting a chart book. I get one every 2 weeks and I would continue to draw. So this hands-on drawing the movement of different commodities, different stocks, the market, I felt a really good feel for the uses of technical analysis. Now, obviously, it's all computer driven. What I do for my clients is I sit down with the client. I make my investment decisions, or the majority of the investment decisions for the client, using the charts and technical analysis. Obviously, fundamental analysis is important, but technical analysis is my basis for the decision-making process for investment. But I do more than that. I will get to know the client, get to know what their goals are, get to know what their needs are, and then structure a portfolio or select these investment vehicles that are going to get them to be able to accomplish their goals, be it retirement, college education for their kids or their grandkids, and also make sure that we transfer as much money as tax efficiently as possible to the heirs. So that's an important part of the process as well. So why was this week so important? I had described several podcasts ago about Dow theory, and something happened with the Dow theory that is extremely important. And I'm going to show it to you right now. So Charles Dow, 1899, he created the Dow Jones Industrial Average, and then shortly thereafter, he created the Dow Jones Transports. And what he found was there was this theory that he was able to come up with, which has 10 tenets. But one of the most important tenets is the Dow Jones Industrial Average and the Dow Jones Transports. It was the rails back then, but now it's the transports, that they have to confirm. That's one of 10 tenets, and that's the most important tenet. So what's that mean? That means if the Dow Jones Industrial Average is in a bullish uptrend and the Dow Jones Transports is in a bullish uptrend, that's a very important sign for a continuation of the bull market that you're in. He died in 1902, so he only had 3 years to work on this and publish this in the Wall Street Journal. But there was an understudy who happened to be a reporter at the time. His name was William Hamilton, and he took this and worked on Dow theory until 1929. So let's look at these indices in detail. What's in these indices? So if you take a look at what I've got up here, is I've got an Excel sheet of the Dow Jones Industrial Average. It's 30 stocks. It's changed. They take companies out and put new companies in these indices all the time. They continue to massage these indices to try to make them as current and as relevant as possible. So you have Goldman Sachs. You can see the list of Caterpillar, Microsoft. You can see the list of the stocks that are in the Dow Jones Industrial Average. Now, what's in the Dow Transports? Well, there's 44 stocks in the Dow Transports, and it's transportation. Uber was added I would believe in the last year or two, obviously. And then you have all these transportation stocks. The fundamental basis of this is if they're moving in sync, if they're both going higher, the transports and the Dow, well, the transports, that's what moves the goods. And the stock market being a barometer of economic activity, that would mean that economic activity is picking up or improving. Now, there have been people that have tried to disprove this. They have this something called the modern Dow theory, which takes different indices. But I believe that there have been that much of a change in human nature over the last century that this is no longer valid. I believe this is valid. And what it's giving us is it's giving us a signal for an ongoing bull move. And I believe this is a shorter term cyclical bull market. But that could be 3 or 4 years. We've already gone a couple of years, and we could go a few more in this bull market. So I'm only going to show you 3 charts today, but these are very important charts. They're relevant to what I'm talking about right here. What I have up is the Dow Jones Transportation Average. the Dow Jones Transportation Average, let's call it the Dow Transports, or the transports, they have been in this, you see this channel, this trend channel. So you've got upper boundary of the trend channel, the lower boundary of the trend channel. It's been in this for since mid-July, and it has just decisively broken out to the upside. Now, something else I want to show you is if you go back, let's look at this on a weekly basis. What you're looking at is a weekly chart of the Dow Transports. We've got a 1, 2, 3, 4, 5. I've got 6 years of data here. So by going from daily to weekly, I can condense it. I can get more data, and I can get more of a longer term view. This is a significant line, this line of demarcation, this white line. And you can see that it's been years that the market has tried to get above this line, and it's struggled to do so. Right here in 2024, it got up to the line, but it was rebuffed. Here in end of 2024, it broke the line, but it got pushed back down, and it's been under ever since. So here it has decisively broken out. If we took out these all-time highs right here, that's even more positive for this move. So we have a transport index that has broken out to new highs. Let's go back to daily. Dow Jones Industrial Average. It's fighting for its highs as well. You see this right here? That's the all-time high. So you've got the Dow, and the Dow has been in an uptrend since May. So you see this red line? That's the uptrend in the Dow. So we have what I believe we have is confirmation. We have the Dow Jones Industrial Average that is traveling in an upward path. It's in an upward trend, and we have confirmation from the Dow Jones Transport. So that's an important sign that we're seeing, again, a continuation in this bull market. Something that's been happening, is the overall market is bearish. The individual investors are bearish. The institutions are buying, but the individual investor is bearish. That's a good sign for the market. Are we in a bubble? No, I don't. It's hard. You don't know that we're in a bubble until after a pop, but I don't think we're in a bubble. You're in a bubble when everybody's so euphorically bullish that's nobody can see any bear argument whatsoever. And that it's different this time because people are relatively bearish. The investors are relatively bearish at this point. It's changing a little bit, but that's a fact. And you see these sell-off here. This is the Dow Jones Industrial Average. This is 2 years. You see this sell-off here in April. That was a scary thing. It turns scary quick. So when you have these sell-offs and everybody is just thinks we're in a bubble, they're rushing for the door, that's a good positive sign for the market because what happens, this was a correction. It was a correction in the ongoing uptrend. You have to have these corrections. Charles Dow said a correction is like a purge valve on a steam boiler. It lets the steam out, and it has to go through this so the steam can build back up again and push higher. That's what this is. Corrections, the people who for some reason can't hold on or they make bad decisions. We're dealing with human nature here. We're dealing with human psychology. So the people that run for the hills, that flushes the excess out of the market, and then it gives the market time to build back up again to move higher. So these corrections are necessary. It's the same thing with this correction we just recently had. It turned bearish quick. People thought the sky was falling, and what it was another correction. So that's good. You want to have this fear on these corrections to flush this market out. So the investing public, including the analysts, are too myopic. They're not looking at the longer term trend. That's why they're getting bearish quick, is they're looking at the shorter term phenomenon. Let's take the Santa Claus rally. There's a strong statistical probability that the latter half of December is positive. Everybody's talking about it. Now, I got to tell you, the last 2 years it's been negative, but mostly it's positive in that time period. Does it really matter? Because investing is a longer term process. So who cares what happens in the latter part of December? Obviously, it's great to look at your money going into the holidays, put you in the holiday spirit because you're making money, but it's human nature to be too short-sighted. What I've got up now, this is not a price chart. This is a breadth. This is the participation, the amount of companies that are participating in the up move. What we have here is, you see this red line? So breadth is going sideways. It's been going sideways since September. Breadth is not bad. Breadth is not good. Breadth is in the middle. And so what's that mean for the market? From my perspective, that means that we're going to see more volatility. And the reason this volatility is feeling so bad, so painful, is because we haven't had any volatility for a long time. These sell-offs are normal. The market typically sells off 10 or 15% every year on average. It has a couple 5 to 7%ers in there. So we're going to see more of that. until we get Brett that picks up and gets going again. So I plan to come out again when I see something important. I'll put one of these up. If you have any questions, if you have comments, if you have any ideas on my podcast, what I could do differently, I'd be happy to take those in. So if you'd like me to look at your portfolio to make sure you're positioned properly for success, I'd be happy to do it. It's Scott@DollarCapitalAdvisors.com, 949-497-6366. DollarCapitalAdvisors.com is my URL. You can go on there and check out my website. Thank you again for tuning in. I hope this has been instructive, and I look forward to putting more of these up in the future.